Hello, hello. Is another yen carry trade upon us that could nuke the markets? Or is it time now to buy the dip even stronger? Let's have a look at these things. In the next few minutes, I will make my analysis about what the situation is. We'll go through a number of macro influences here, also look at the charts and other things in order to be more prepared for this coming week. All right, so let's get started. Here we have the dollar yen. Obviously, we saw this massive move, right, from 162 to even 142. But we've seen a bounce in the recent days at the end of last week, right? Today's Sunday. And that had to do clearly with the Bank of Japan basically caving in after they raised rates and brought havoc over the market. Remember, the carry trade is basically people borrow yen and then they buy other assets with these yen. And now the thing is that trade only works because of leverage. So you must imagine like someone that has 5 billion may leverage themselves up to $100 billion. It's like trading Forex with like 50 to 100 leverage. You can do that kind of trade as a hedge fund or things of that nature with like 20x, for example. So there is a lot of leverage in the system. That's the only way why this trade is interesting to these people, because they can make that kind of return on 20x the size of their own capital at very little risk, right? So that's how it works. Now, as the market dropped last Monday and big fear went to a shockwave through every market, especially also the crypto market, and I'll get to that in a second as well, we've seen that the Bank of Japan basically caved. So we saw Ukida said like, therefore, the bank will not raise its policy interest rate when financial and capital markets are unstable. What does that mean? Does it really mean that the Bank of Japan now has given up on their own currency? Because otherwise the yen is doomed. It's going to go, I wouldn't say to zero, but look, also the population in Japan is just so old. The amount of debt to GDP ratio is the highest anywhere. So it's just crazy how Japan actually still continues to function in any shape or form. So it's this close to really imploding in a way. And by the way, that's also, to me, a clearly foreshadowing what at some point will happen to other Western currencies as well. Maybe the dollar? Not just yet, because the dollar obviously has a stronger economy backing it, stronger war system and more influence, and is also less burdened by debt, but it's getting there very quickly. So what's going to happen here now? Now, there are a bunch of different opinions out there, and let's have a look at them. So, first of all, following the capitulation of the BOJ, basically the BOJ saying that they will not raise interest rates, traders have halved expectations for rate hikes, now seeing only 30% chance of a further hike this year, down from 60. So that's good. So the yields on the Japanese bonds fell to 0.27 from 0.46. So that's the cost basically for a bond. Remember, Japan's economy is completely debt financed. So Japan cannot pay its debt if the interest rate is higher, if the the yields for its bonds are higher. They cannot simply finance their own state, And don't forget, the Bank of Japan is actually almost the biggest owner of all Japanese bonds, of all Japanese stock markets. It's just crazy. Like I said, they're literally basically at the end stadium of what's going to happen to probably any fiat currency at some point when the debt burden gets too high. So anyway, they said they will refrain. So watch the yields of the bonds. The yields of the bonds are extremely important to watch for the market, whether it's going to, like the stock market or risk markets in general, whether we have a risk on or risk off environment. And also, it can foreshadow certain movements. So it's important that you have like a map, that you pay attention to more things than just lines on a chart, right? So JP Morgan, obviously they say like, oh, don't worry guys, the carry trade is unraveled, only half of it is already gone, like most of the people are out, all good, all good. Whenever I see like big banks say something like this, and it comes out on Bloomberg, it's actually behind the paywall even, like maybe it's just me, but I don't trust these guys, not even a little bit. So no, I don't buy that. I don't buy that. Like how? And I think this is actually an interesting point of view here. So 8 years of negative BOJ policy rate, 8 years, and you think it unwound in a couple of weeks, like how is that going? Like I don't think it's true. He's obviously looking here at waves, like Elliott wave count, and he's looking for wave 5 for a much another move here, another leg. And that's why I think this is not an unreasonable stance to have. If you want to buy back into dollar yen or whatever, then it needs to happen extremely carefully, in my opinion, with very, very, very tight risk management. Whatever comes out of the US that is inflationary in news and data and economy, that is positive, because that means the Fed has less ability to raise rates, even though it's almost considered 100% that the Fed will raise rates in September. But if, for example, another strong whatever comes in that pushes inflation up, then Powell will say like, oh no guys, we're data dependent, so we decided to not do it. So that would be positive generally for stock markets. It's crazy, right? Because usually stock markets thrive on low interest rates. But now it's important that the ratio between the dollar and the yen doesn't get worse, because that will lead to more unwinding of the carry trade and more selling pressure, okay? So that's a dynamic that you need to understand, that you need to have your eyes on. This is where the music plays. It's the most important force in the market right now. The most important one, regardless of anything else. This is the thing that you need to watch. And here, for example, he says like, now due to BOJ capitulation, the yen carry trade is back on. So people are actually piling back into the trade, saying like, okay, the Bank of Japan's not going to raise rates again. They already said it, but what if inflation keeps rising there? They have no choice. So what he thinks is that, in fact, at some point, the carry trade will explode. And then the VIX will go to the moon, and we will have basically, the US momentum, this is like an ETF here, see more lows. Shorting VIX is another very hot play. Look, the beauty of shorting volatility is that, as you can see, it's always mean reverting very quickly, because it's simple to explain. Volatility comes in bursts, right? Volatility is not something that stays for a long time. Like a bull market keeps grinding up in stocks, up and 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 right. So, but a VIX will go up, down, up, down, up, down. But look, if you were trading these ups, you were selling here to capture this. You were selling here to capture this. You were selling here. Oh, it's like twice the move already. You said this. And then suddenly, boom! This is where margin calls happen. And even that move, huge, So selling volatility is a pro game. I actually have a volatility selling strategy. I do it with options, but I hedge myself with selling futures on the S&P as well then. So to make sure that when the market drops, it actually hedges out what I lose on the VIX then in a directional trade on the S&P. But that's a little bit of a more advanced play. But nonetheless, this is important that you pay attention to that you have that on your map. Don't be this guy. The BOJ capitulation formed a 600 pips weekly bullish candle. So all he sees is like, oh, look, this candle is telling me buy back in. Look, maybe he's right. Maybe he is right. And maybe he has more data that he's considering. What I'm saying is that if you don't have all the data, if you're not watching the yields on the bonds, if you're not watching the economic data that comes in from an inflationary perspective that will impact the central bank's decision, if you're not watching other, things that are clearly in context, and only look at this one simple candle as your decision-making process, you are doomed. You will be ran over. You will be crushed. So, in my opinion, this is a great example of being extremely simplifying things. At times it might work, and that's sort of the thing. Nobody ever really knows what will happen. And this is why we build systems with probability and statistical edges. Because we don't fucking know. You understand? And if you think you know, it's only a matter of time that you place a too big bet on the too false side and you will lose. Right? And we don't want to do that. And if we look, for example, in the prime market terminal, I think that's an interesting thing to look at here as well. Dollar yen. So we can see from a seasonality perspective, actually, it's still flat and then actually might go up dollar yen towards the end of the month. So that's rather a positive for the dollar yen trade. Nonetheless, again, seasonality or even pattern are not, as strong as all these macro factors that we are looking at. We can see that the patterns are actually rather flat, so that's already weakening the seasonality aspect. And if we look at the DXM, we can see most people are actually still 50-50, so there's no value to pull out of that data. So keep all these things in mind. Again, look at a number of things and combine them, confluence them in order to increase your trade probability if you want to trade something like that. What I don't like is what's happening this weekend is that we're seeing rather pullbacks in the crypto market. They're not too big, and if we don't break like here these support areas, that's still okay. But we can see, for example, Solana, I think has actually become a market that I look at a lot because it's a little bit more volatile than Bitcoin, so it gives us even easier ways to look at. So we're still within the channel here. We haven't broken, I guess, the 140 or even in the 130 next are important levels. What happens often is that the crypto market happens first and then other markets follow. So also another indicator that you can use to make your decision as to whether you want to take risk on or risk off measures in your trade. So that's my analysis on, at the moment, in my opinion, the most important trade in the whole world. So I hope you enjoyed it. Please like and share if you did, and I'll see you on the next video. Bye-bye.